Hey everyone, Adam here. I'm back putting out another video, hoping to add some value, give you some ideas for some trading. It's the 31st, it's the last day in January. Bit of a slow start, a bit of a rough couple of weeks to the beginning of the year. Lucky we've got another 11 months to trade. Not a problem. I've actually had a couple of emails, a couple of requests about how advanced pattern trading and the Gartley pattern in particular, and how I trade it, and if I could explain, perhaps do a video on it. So I thought I would. So here we go. You've got, not this one, we're going to go on to the New Zealand dollar on the 240 chart. Might as well break the chart down a little bit as we go. Ebbed and flowed all the way up, and then we rolled over, breaking structure here, 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 and so on, all the way down. And then, so we got this bearish move down, we've had a little pop up, and then we're just consolidating. So after such a big move down there, the market's just taking a break, a little bit of a rest, perhaps trying to figure out what it wants to do. People waiting to make their decisions, see what's happening. But if we just zoom in here a little bit, we can see that this is what I was looking at. We had a move down, market retraced back up. Where did it retrace to? Look left, structure leaves clues. Look at that, beautiful. The tip of that wick there tested the low, the support of that wick there. So support, rolled over, we broke, made a new low, and then the structure resistance level held there, and we rolled over again, and then the market retraced back up, ebbed and flowed a little bit there, but ultimately retraced back up to there. The high of that wick came in where? Look left, structure leaves clues. A little bit higher than that one, but look at it, how it hit that one bang on there. Unbelievable, unbelievable. Reading a price chart, and we break down. Couldn't get any lower again after this, and we broke a little bit higher there. Broken close, higher high, higher close there. And now we've just moved into consolidation here. We're just moving sideways. Can't get out of this sideways action here. Can't get a break out of this high. Can't get lower than this low. So I think what we'll find is actually, from when I was looking earlier on, we will actually see that there is, after I've deleted all these, I'll probably edit all this out. Would have been a bit quicker than you watching me do it. But actually, if we zoom out here, what we will probably find is, yeah, just touch that up a little bit there. Bump that up to that level there. And I would say there. Yeah, these levels here. Within this zone, if we zoom back in, we'll probably find that, yeah, look at that. The bottom of this consolidation point here, the market held. We broke below, we came above, we tested it there, couldn't close below there, came back up, we broke back down. I'll tell you what I'm going to do, I'm going to put this on because it irritates me when it's not easy for you to see what I'm talking about here. And then we break down below, close below, come back up, sat on it there, moved back up, came down, tested there, and right on that line. And now we've broken above, and who knows, we could come back down here, or we'll just rally up and make new highs. Okay, so let's get to the Gartley pattern, because that's what the video was all about from the beginning. Like I say, the trend down, there's no patterns in there. In the lower time frames, there can be patterns hidden within these period points here, the retracement points. But consolidation breeds patterns. And so as the market starts to consolidate, we're able to find what we need. So if we zoom in here, firstly, we're going to identify our impulse leg. So we've got our initial starting point there. We're going to take a swing high to swing low, swing low to swing high, excuse me. And that is our impulse leg. We've broken the high here, So we've got our impulse leg, and we're going to add our Fibonacci onto there. So we go swing high to swing low to swing high. God, I'm not getting it right today, am I? Swing low to swing high, and we need to see a touch of the 618. Got that right there. So maybe if I just take out those ones, make that a bit clearer. I'll fatten that up a little. So we hit the 618, and then what we're looking for is a retracement back up, and we want to see another 618 hit from the A to the B leg. So we take another Fibonacci level, A to B, hit the 618. Now we know that we're in for a potential Gartley completion. So now we've got those two Fibonacci levels hit. Now all we need to see is a break below this level here. And what we're going to do is, for our completion point down here, we're going to take a Fibonacci extension level from this A to the B leg and back up. And what we're going to look for is the 127.2 Fibonacci extension level. So let me just take out the others there. So that's the decompletion point of what we're looking for. Also, it normally, for the perfect Gartley, lines up with the 786 of the X to A move. So the first Fibonacci level that we took from X to A, and we've got the 618. If we leave the 786 in, that should line up within the same level as the 127.2. It's close enough there. I can even go as far as taking an ABCD pattern that should complete down at that level. And we had it there. Yes, I know we got a little bit higher here on this particular chart. So we'll ignore that for the moment. Now the thing is, although price came up and came back down and made this new low, and then we've moved up higher, price came below this level here ever so slightly, and I know that we've rallied back up and gone higher than this point, but that doesn't matter. All we're doing is taking this high point instead, because we haven't broken the A leg, which is the most important thing. Pattern would be invalid if we broke this level up here. Right, so all we're going to do is wait to see if price can get down to the 127, and then we've got a potential long entry. Stops below the X leg. Targets will be from the A to the D completion point. It's getting a bit messy now, I can see, so I'm going to move that over there. So what we'll be looking for here, you can take whichever targets you like. I personally, for the pattern trading, take 38.2 and a 61.8 level. So target 1, target 2. And depending on the pattern, you can have the completion point at various different levels. Depending on how the charts have moved, you can actually get a very deep Gartley that almost pretty much looks like it's almost pretty much sat on the X leg. So your risk to reward is fantastic when you get those deep Gartleys. The pattern is 65-70% profitable, the win rate. So it's a good pattern. I trade it every time I see it, and it looks like this if we draw it in. So you've got, would have been there, it's gone a little bit higher, so I'm going to take to there, and then we're going to move down and look for the completion point of the 127. And if we just join it up, all of a sudden, there you've got your Gartley pattern. The same applies for, this is a bullish Gartley, the same applies for a bearish Gartley. All you do is obviously switch the pattern around. So instead, it would look something like this. And your decompletion point would be this level here. And you'd be looking for the market to roll over. Alright, so there's not much more to say. That's the advanced pattern. That's the Gartley pattern. That's the criteria that I look for. Check it out on your charts. try and identify as many as possible. It's just getting your eye in to spot them. Get the fib tool out, just repeat it, doing it over and over again, and everything will just start to stick out to you. You'll just spot them within the chart with actually not even having to put the lines on. You'll just see it with your own eye. Alright, so that rounds things up for us here, and I'll see you guys on the next video. Don't forget to subscribe and like the video. Give us a bit of support, lets me know that the content's good, whether I need to change anything or not. And yeah, subscribe, because I'll be coming out with regular videos. I'll be coming out with weekly update videos, basically giving you an idea of what I'm looking at for the coming week. Alright, so good luck in the markets for February, and I'll see you soon.